And here we go. Check this out. Yay! Come on. Come on. Here we go. Here we go. Here we go. Here we go. Where to go now? Where to go? Okay, something like that. I forget how it goes. All right, here we go. Who do we got? Who do we got? Who do we got? Ooh, Colton, Tay, Mr. Brown. Mr. Brown, you've such a lovely daughter. Janar? Jarnov? Okay, Paula, Ed, Cause, Ivan. How are you guys? Paula, Dan. Robert, how are we all doing this evening? Good evening, good evening, good evening. And how are we all doing today? Here I come to save the day. Okay, anyway, I watched that movie the other night, Saturday Night Live. Anyway, just a story of how they came about with Saturday Night. So what am I looking at? All right, this is what I'm looking at. This is not what I want to look at. So what do I want to look at? Okay. And that works. And here we go. Yay! All right. Black arrow eating. All right. Let's get this one open. See if I get this right. Get this out of my way. That was in my way. Oh, forgot. I changed my room around a little bit. Don't have the same things in the same spots anymore. That's weird. All right, let's do this. Okay, Alexa, lower. All righty. Good evening, everyone. Ooh, look at this. Ishmir Moore wants to take a look at Pfizer. Let's take a look at Pfizer first. We're on the list. We haven't done any introductions or anything like that. PFE. Intro. Uh-oh. Pfizer. There we go. Intros, please. Intros. Oh, that's good. Intros. Good evening, everyone. Vance, how you doing? Good evening, everyone. My name is James. This is Dividend Stock Talk, where I show you what I am doing. Well, it's nothing really major or anything like that. I'm doing a simple, safe, predictable, consistent 1% per week trading strategy that basically I created for my 9-year-old daughter back in 2008. She's, Daddy, can you please teach me what you're doing? So, 9 years old, she wanted to learn. I'm going to play the video for you guys just so you can get acquainted with the little princess. Where is she? Where is she? Where is she? Right there. And give me a second. I'll pop right up. Expectations for tomorrow. Of course, there are expectations for tomorrow. YouTube channel. We'll go to YouTube. Would you believe we are into a new week? It's February 2nd. Groundhog's Day. Does anybody know what happened with the groundhog? Is there anything going on? Did Punxsutawney Phil actually see himself? Are we having more winter, or is what's going on? What?
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad didn't let me call me that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists.
More snow next week. Sorry. I was supposed to laugh, was I?
List number 1 is stocks.
There's over 20 days in the month of January.
20 days.
There's over 21 days in the month of March. What does that mean?
Merry Christmas, yeah.
Every single day you buy
It's my favorite part's coming up.
There's a different company paying out dividends.
Yay!
Anyway, seriously. By picking just one company per month, just one. January, February, March, that's 12.
Well, no, that sucked. All right. That being said, basically that was my daughter.
12. You can buy
Uh-oh.
12 different companies for the whole year and still make over 20% a year. That is easy. One trade a month. Who can't do one trade a month? But
Guy talks too much. Anyway, what are we doing? Alrighty, so that being said, my 9-year-old daughter wanted to learn how to trade, so I had to come up with a strategy that was simple, safe, predictable, consistent, and no way for her to lose. That's 5 criteria. So I had to come up with 5 rules, very simply put. No, I'm not sailing Caribbean, maybe next year. Never. 5 rules. Rule number 1, never buy something you don't understand. If you're not okay with owning it for a long period of time, don't buy it if it doesn't make sense. Rule number 2, never sell at a loss. Rule number 3, make sure the company is consistently profitable. Me personally, I like 20 years of increased profits. Very good companies. Rule number 4, weekly options only. And the reason why I say weekly options only, like I said, I want a simple, safe, predictable, and consistent cash flow. Now, weekly options allows me to do it every single week. Okay, I grew up in the 70s and 80s. I'm used to going to work at 8 o'clock in the morning on Monday, being done with the week by 5 o'clock on Friday. Well, the stock market's almost the exact same, but I only work for 20 minutes a day, 20, 30 minutes. That's about it. I pick my stocks and let it go. 1 hour a week is about all I do. It's simple, safe, predictable, consistent, all that kind of nice, neat, fun stuff. Let's take a look at our very first one. I always do it by the numbers. Very first thing I always want to see is the 1-year chart. And I'm looking for 5 things. We got that 5 number again. Where's the high? Where's the low? Where was it? Where is it? And what's the direction? What is the movement? What is the showing me? Well, it's not all the way over to the right or the left, depending on where you are, but that's a year ago. Okay, it went up, it went down, it went up, it went down, it went up. Basically, that's the simplicity of it, you know, down, up, simple. After that, I want to check the numbers to see if it's going to work for me. What am I looking for? Well, I'm looking for my 1%. Well, if it's a good company, Pfizer, now I'll take a look at almost anything you guys suggest. I do have some exceptions. I would like it to be a dividend stock company. Like when you go back to rule number 1, never buy something you don't understand. Well, if you want to buy something, you should be able to know whether or not it has options and whether or not those options are weekly or monthly. And does it have dividends? This you should know before you even suggest me taking a look at something. Now, Pfizer, I know it does. B-Rad Daddy, he wants to take a look at Riot. Now, I like Riot. We will take a look at Riot. Some stocks I just don't want to take a look at because I know that they don't have dividends or they don't have options, one or the other. But Riot, I know, and I also know Pfizer. So we're looking at Pfizer right now. Rule number 5, make sure all the numbers work. Okay, what am I buying it for? That's number 1. What am I buying it for? Well, we already know what the company is, Pfizer. So you put Pfizer in here, gives you all the numbers you need to know. The high, the low, the open, the close, the bid, the ask, the volume. Okay, these are new words to some of you, but you'll get used to it. It's not that difficult. Do you think CCL will float back? Don't know. And I don't look at comparing prices from years ago to where they are now. My main concern is where are they now as compared to last week, the week after, and last year. That's it. I want to see the flow of where it's going. I don't want to see what it was like 5 or 10 years ago. It's a totally different world we're living in now. Week by week by week. I don't look at the past because nothing I can do about it. I can only look at where I am, where do I think it's going, and then just go from there. So Pfizer, 26.32, the closest strike price. Now, when I say simple, the covered call is one of the simplest trading strategies there is. You buy the stock, you sell somebody the option to buy it from you at a certain price by a certain date. Okay, the price is made up by right here and what's saying on the chart. The chart tells you where we are. And this is what my fee to play the game. My fee to jump on this game, yeah, it's going to be 26.32. So the closest strike price, remember I said simple, covered calls one of the simplest and safest strategies there is. So 26.32, the closest one is going to be the 26.50, and that is right here. And that's going for 56 cents a share. Now, if you're not aware what that means, well, if I'm buying it for $26.32, once I buy it, it is mine. I can do whatever I want with it. What am I doing with it first thing tomorrow morning? Because I'm buying it, the stock, first thing in the morning. and that I'm selling somebody the rights to buy it from me for almost the exact same price I just paid for it. Sounds kind of weird, right? So if I'm paying for $26.38, I am then turning around immediately, because there's two trades in one. It's called a covered call. So we buy the stock and sell the option all at the exact same time. So I'm buying the stock, $26.38. Then I'm going to turn around and sell somebody the right to buy it from me at $26.50. That means any time between 7 February, this is why it's called a weekly. 7 February, that's this Friday. 14 February, that's next Friday. 21 February, that's 3 Fridays away. 7 March, well, that's 4 Fridays away, or 5 Fridays away. So I can pick any one of these. And I'm going to show you what the math looks like. It's a relatively simple math. It's like a third grade math, you know, percentages, adding, subtracting, all that kind of nice, neat, fun stuff. All right, so if I'm buying it at $26.38, and the closest strike price is $26.50, if I sell somebody the rights to buy it from me for this week, 7 February, that's this coming Friday, okay, I'm getting paid 56 cents a share. Well, what does that mean? Well, 56 cents a share is almost 2%. Now, 2% for 1 week, because remember, it expires on the 7th, which is this Friday. So if it's expiring this Friday, and I'm making 56 cents per share, well, let me show you exactly what it looks like. Because we're gonna walk through an actual trade, and we'll see it from there. All right. Before we do that, I want to see what the chart is telling me. Besides the high here, the low here, a year ago it was here, and right now it's here. Besides that, I want to see what it's really showing me. What is it telling me it's going to do next week? Now, all we can do is just look. If you think of it as a river, okay, it flows, all the curves. If you ever seen like there's some rivers which take a look at them, they'll look really cool from above. Up, down, up, down, up, down, up, down. So we're right here now. Where are we going next? Is the riverbank going to the left? Is it going to the right? Is it going straight? Okay. Well, we got a question here. Team Snaggle Whiskers. Seems like the market may start off with a drop tomorrow. Does this affect your selling options at the market open tomorrow? Absolutely not. Now, the reason why I say that, when I say never buy a stock you don't understand and you don't want to own. If you're looking at investing in a stock, it is going to go up and it is going to go down. You have to know this before you jump into this game. Because this game, you have what's called the 52-week average, or the 52-week high, the 52-week low. You're going to get it no matter what you do. Okay, tomorrow it's going to be a different 52-week high, 52-week low. And then the day after that will be a different one. Every single day it's a different number, because every single day, one day drops off and a new day adds on. So where is it within that time frame? And if you're going to buy something, you got to realize at this moment in time, it's at $26.50. It could drop to $24.50, which is the low of the year. It could shoot up to $31.50, which is the high of the year. It's a game that you need to know the rules roughly, but always pick the pony you think is going to work. What do I mean by that? Well, we checked 2 weeks ago. There was 9,835 different companies that you can invest in at any moment in time. So, out of those 9,800 companies, you got to figure out where's the best place to put your money. Me, personally, I like companies that are consistently profitable. 2 decades of consistent profitability. So, how do you figure that out? One, you can go directly to the dividends. Have they increased? Because if a dividend is a portion of the profits, if the profits increase, the dividends increase. It's that simple. Okay, so if the dividends increase, well, the profitability's got to increase. Simple. All right, so let's get moving on. Holy cow, we're on 53 on a Sunday night. Let's reboot this thing, see what happens. Okay, you guys, don't go anywhere. I'm going to reboot and just see what happens. Come on. Wow, it's not letting me. Real-time performance. Okay. And now the end. Okay, we're gonna reboot just for the fun of it and see what happens.
He's humiliated the World Economic Forum to their.
Okay, let's try it one more time. 3, 2, 1, boom, and you're live. Okay, so that being said, let's do this. And let's do that. And let's do that. All right, Paul, what's happening? All right, so we just rebooted, so let's see what's going on. All right, so with Pfizer, let's take a look at the chart and see how good the numbers look. So let's move this out just a little bit. Okay, a year ago, we were at 27.11. Can't see that. Okay, our high of the year is 31.54. And that was the end of July. So the end of July is the high of the year. All right, so where's the low? Well, the low's right here. Right there. November 15th, 24.48. See, the low, and then she shoots up, comes down, goes up again. Well, what happened on Friday? What is this all about? Now, we're going to take a closer look at that in a second. But look at the motion. Kind of looks like a river, right? Down, up, down, up, down, up. Where's it going now? Okay, gives us a good idea where we're going. Okay, Asan Kiani, you want me to take a look at analysis of Robinhood coin? Sorry, dude, I don't do cryptocurrency. You're barking up the wrong tree there. XRP, that's a cryptocurrency. No, thank you. Don't do cryptocurrency, but thank you anyway for asking. All right, let's keep on keeping on. The last 30 days, get a good idea where this thing is going. Okay, 30 days ago, we opened up at 26.75. Our top right there, 27.57. That was on the 7th of January. We bottom out on the 23rd, 25.85. High, here's the low, now it's going back up. What happened on Friday? Well, we have a higher high and a higher low. That means, Pawan, how are you today? There's no real way of deciding which way it's going to go. Overall, it looks like an uptrend, but it made a lower bottom on Friday. So what does that mean exactly? Doesn't really mean anything. You know, it just means we'll see what happens. Okay, we'll see what happens. What is this one? Town Comics. What about SWPPX? Never heard of it. A call expired. Where on TRS does it show how much I made collecting the premium for that week? How is your Apple call? I don't have an Apple call anymore. I sold that one. That's an interesting question. Where does it show? Because we have the... I got to sign into this one over here. I'm going to wait for that one to log in before I can answer that question. All right. See, your profit and loss year to date will be down here in the lower corner. So you just figure out where all your positions are, what your profit and loss is year to date. So as the stocks go up, as the stocks go down, so will the fluctuation of this profit and loss. But as they go up and down, the dividend and the premiums get thrown in there, and it allows you to see exactly what you made. Now, all my positions, if you take a look at all of them, I got only one of them that's higher than what it should be. So I'm still at a loss so far this year on paper, but doesn't really mean that. Hold on a second. Intel. Hold on, Jamar. I'll write Intel down. Okay, because I do have some Intel. Huh. Waiting for that one to load up. All right, so let's go to the next question. Transaction history and Schwab website. Mahesh, how are you today? Wally B. What's a good fam? We got any millions yet? Hey, Willie B, what's happening? Did we make millions yet? We're coming into week number 6 of the year. Tomorrow's looking to be a very red day based off the futures. Okay, thank you, William. Please, gold trade. Pawan, I don't do gold. I don't do Forex. I don't do cryptocurrency. I don't do smart contracts. Thank you, Raffaello. Dustin, SPY is not one I like to look at. The numbers just don't work for me on SPY. But let me show you, just in case. Okay, take a look at that right here. Here's your high here, drops down. Here's your 30-day bottom. Here's your 30-day top, drop down. Now it's going up here again. Yeah, I don't chase something when it's this high. Sorry, dude. And I don't even like the dividends this thing pays out. So let's take a look at the dividends for that. Tell you why you cry. That ain't it. Where the hell is it? Here we go. SPY. Okay, we're going to take a look at SPY and I'll give you my opinion on it. First thing I want to look at is historical data. DJT. All right, Q-Town Comics. DJT, it's not 20 years old yet, so it's something I don't even bother with. Okay, so once we get to historical performance, yeah, Scott Hacker, hold on a second. Hey, weren't we going to do one on Pfizer? Yeah, we'll do one on Pfizer in a second. Let me finish this up. So, over here on Yahoo Finance, I want to take a look at the historical data. Down over here, it says historical data. I want to find out exactly what kind of dividends this has been paying. So I go to historical data, dividends only. And then I want to take a look at the maximum amount that they're going to show. Now, the maximum amount they're going to show, well, I only want to go back 20 years. I don't want to go back further than that. Because my concern is, are they consistently profitable for at least 20 consecutive years? Now, when I say consistently profitable, what I mean specifically, okay, because some people always get the wrong idea here. Consistency and profitability. That means if this year I make $1, next year I better make $2. And the year after that, I better make more than 2. More like 1, 3, 7, 9, 11, 12, 15, 18, 19, 22, 27, whatever, as long as the numbers go higher and higher and higher and higher, and no backwards. Okay, I don't want to have a company that I invest in that are profitable one year and next year they make less money. That doesn't work for me. So I only like companies that are consistently profitable, and there's enough of them out there. Okay, so let me give you a couple of lists. Hope you got a pen and paper, crayon, mascara, marker. I don't judge whatever you want to write with. You got the Dividend Kings, 54 companies that are consistently profitable, which means they've increased their dividends to their shareholders for more than 5 decades. Emma Louise Burgess, woohoo! Oh no. Live video blocked. It looks like your live video may contain music. Alexa, off. Apparently, Facebook doesn't like Alexa. Well, imagine that. Emma, how are you today? You should have called. We had a nice party today, barbecue. You would have loved it. Anyway, I want to look at the last 20 years of the dividends to make sure they're consistently profitable. So let's take a look. Now, I'm going to read them out to you. Now, are they consistently going higher and higher? Let's take a look. Okay, 21, 32, nice. 29, wait a second, that's going backwards. Now, ask yourself, are you okay? Seriously, are you okay investing in a company that's profitable one year and not so much the next year? Because basically what it's saying, okay, 21, we all know 21, then 32, well, that's 11 cents more. That is almost a 50% increase. Okay, from here to here, 50% increase. Lovely, that's awesome. But why is it going from 32 to 29? That's backwards. That's about a 10% decrease. That's a decrease. I don't want to see decreases. Okay, the next 32, 27. Again, this time $5. Well, $5 is about 18% decrease from here to here. Then you got 31. Great, it went up to 29 again. 8% decrease. And then an increase. Lovely. Then a decrease. It's like I'm not even past 2 or 3 years yet. We're only at 1995. Now, when I say 20 years, well, this one goes back further than 20 years, but they're not consistently profitable. Let's keep on going. 27, 32, 31, backwards, 38, 29, backwards, 35, 35, 37, 30, backwards, 35, 35, 38, 31, backwards, 35, 36, 39, 32, backwards, 41, 37, backwards, 35, backwards, 37, 35, backwards, 38, 41, 32, back. It's like a 50-50 shot. Half the time we're going up, half the time we're going back. Now, I honestly don't know why people put money into this. But hold on. It gets worse. Imagine that. Facebook didn't like the fact that I had what's the name playing in the background. All right, let's see if we can get this going again. It's loading, loading, loading. I like having music in the background, but apparently Facebook doesn't like having music in the background. It is what it is. All right. So anyway, I'm going to say no to spiders. But wait, like I was saying earlier, it gets worse. Really does. It's hard to hard to imagine. They're not consistently profitable. Now, with over 9,843, 45, that's a lot. Out of all of those, like I said, there's about 300 that are consistently profitable. So why would you put your money someplace where it's not consistently profitable? Okay, to make matters worse, check out the annual yield. What's the annual yield? Well, that's the rate of return. If you're putting money in, how much are you getting back? Now, when I say 1% a week, well, that's 50%. So if I put in $100, 50% is $50. So at the end of the year, hypothetically, I should have $150. That's a 50% increase. 50% yield, same thing. Okay, if I'm putting in 100, I'm getting a 50% yield. That's 150 by the end of the year. Well, spiders, 1.2 for the year, not the week, not the month, not the quarter, the year. 1.2% for the year, and I'm getting over 1% every week. So why do people keep investing in the spiders? Beyond me. Let's keep on keeping on. Okay, so we were going to do a covered call on Pfizer. Okay, so let's take a gander the last 30 days. Let's just do one at 26.50 because that's where she is at the moment, 26.52. The 26.50s right there, 56 cents per share. Let me show you how the numbers work. All right, let's get rid of the chart because we don't need it anymore at this moment. All right. And we're going to change this right here. to a covered call. Click on that. A drop-down window opens up. Look at all the trading strategies. Single, vertical, back ratio, calendar, diagonal, straddle, strangle, blah, 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 blah. Whole bunch of them. So I'm only teaching one. Look at all the other ones. My advice, anyone, find one strategy. Get good at it. Once you're good at it, you can do it with your eyes closed, then add the other ones. Don't try to figure them all out at once. Or, covered call. Here we go. Now, currently I said 26.50. So the 26.50 right here. So I'm buying it. There we go. And I'm just going to do 100 share, which is one contract. Now I want to do it at the market order. Now the reason why I want to do it at the market order as opposed to the limit order, the difference between the two. A limit order, you get to tell the market maker what you're willing to pay, and that's all you're willing to pay. Okay, I want to buy it at this price, and I want to do this, and this is what I said. So let it be said, so let it be written. Remember that part? I wonder how many people actually know what that came from. So let it be said, so let it be written. Anyway, the market as opposed to the limit. The market order will fill first thing tomorrow morning. As soon as the market opens, market order will fill instantaneously, which means the other order will fill instantaneously, which means with the two tied together. Remember what I said? Simple, safe, predictable. I know exactly what I'm making before I even do it. Okay, here's the trade right here. Buy one covered call of Pfizer 100s, that's the weeklies, 7 February 25. That's this coming Friday. The 26.50 call strike against the Pfizer stock to open at the market. Okay, here's the break even. The break even, what does that mean? Well, that means 25.74. That's the break even. So as long as the stock is above 25.74, come this Friday, I'm going to profit, the max profit. The max profit is at 75.50. Okay, so I know what I'm going to make before I even do it. Safe, covered calls, one of the safest strategies there is. Simple, it's one of the easiest strategies. Predictable, I know exactly what I'm going to make. Consistent, I can do it every single week because they have an option every single week. Now, I've always saying over and over again, people spend more time planning a family barbecue than they do with their personal finances. So if you don't have 10, 15, 20 minutes a day to look at your personal finances, okay, think about it. The amount of money you have available to you, whatever it is, at some point in time. And for those you just beginning, well, this will happen eventually. Because don't kid yourself. Retirement is coming whether you wanted to or not. Okay, you think I wanted to be 61? No, I would have preferred to stay in my 20s or my 30s. I had a blast. But time doesn't work that way. I'm 61, it's knocking on the door, you know, it is what it is. So it's going to happen to you too. Decide on your personal finances now, because at some point, you're going to have to figure out where your money's going. Where is it coming from? And if you have control and you know how to do it, you're going to have more interest in your money than anybody else. So don't pass it off to someone else. Learn to do it yourself. You put your money in the bank, where do you think they're going to put it? They're going to put it to work to other people by loaning money to people who build businesses, who then look for financing opportunities for people to work and to provide a product or a service. It's kind of like an ecosystem. Okay, people borrow, people do this, people do that, and then you just take your money and you put it somewhere in hopes the place where you put it grows consistently, or you can get an income from it. One or the other. Okay? Well, we're here for income. So, simple. It's one of the simplest strategies there is. Safe. It's one of the safest strategies there is. Predictable. I know exactly what I'm going to make before I make it. Consistent. I can do it every single week. All right. So, max profit on this one is going to be $75.50 per contract. One contract, $75.50. Two contracts, that's a $151. All right, three, so on and so forth. You do the math. Where is my calculator? There it is, right there. Calculator. Okay. Calculator. 75.50 is the profit. 75.50 divided by what it's costing me to jump into this little game here. Well, 100 shares are going to cost me $25.75. So divided by 25.75, and that's going to give us a grand total of 2.9%. That's almost 3% for 1 week. Do you have any idea what 3% is for the year? That's over 175% for the year. Are you always going to get 3%? No. Okay? I usually average 1.2 on a weekly basis. 1.2 is not bad. That was my average for 2024. 1.2. Okay, that worked for me. So whatever I had, I now have 50% more. Not really, because I spend my money for paying my bills. Okay, so mine doesn't really increase that quickly. I pay my bills, and next week I do the covered call again. I use that to pay my bills. Yeah. So I use this money to live off of. Why? Well, because the stock market's been around for over 400 years. Okay? Options have been around since the 1970s. Well, that's another 50 years. Well, I'm pretty solid with my belief that I think it's going to be here next year and the year after and the year after. Okay? We've seen a lot over the last 400 years, and the stock market is still here. I don't think it's going anywhere. Okay? The stock market, you own a small portion of a company. You buy some shares in McDonald's, you own part of that company. It's actually that simple. Now, if it is a dividend stock, you will get a portion of their profits. Okay? If it's a capital appreciation stock, you will not get profits. The stock price will go up. And then at some time in the future, you will sell it for capital appreciation. Okay, so if you're here for capital appreciation, that's not what I do. I'm not looking to buy, I don't even have my chart up there. I'm not looking to buy a stock and have it going higher and higher. That's not what I'm looking for. I'm looking for safe, consistent, predictable weekly income. All right. I have 88 questions. Let's get out of here. Let's get out of there. Let's get rid of this. Let's move this back to where it was. Nope, I want it back where it was. And back to the beginning. Here we are, back to the beginning. All right. Let's keep on going. What do we have here? Looking for questions. Call expired. Yep, made collecting premium for next week. Okay, got that one. Check transaction history. Good. What's a good FAM? Okay, made a minimum check. Okay, tomorrow's looking very. Yep, got that one. Can you show how to do another covered call against stock you already own? All right, how to sell a covered call against a stock you already own. All right, simple. Right click. Well, I got 1,000 shares. Okay. Foot Locker, FL, put it in there. Okay, now, I own it down here at $22.84. That's my price, $22.84. 1,000 shares. And it's currently at 20, so I'll do the 21s. No, I'll do the 2150s. Why not? 2150s, there we go. Okay, get this over there. 10 contracts. Simple. Okay, you're just selling 10 contracts. Selling 10 contracts of Foot Locker. That's a stock you own. Uh-oh, so I missed that question. Missed that question. No News Monday. What are your thoughts on WBA? Okay, we're going to take a look at Intel and then Walgreens. WBA. All right. So 10 contracts, Foot Locker. Remember, I got 1,000 shares, 100 shares per contract, 1,000 shares, 10 contracts. Okay. 7 February, that's this coming February. This coming Friday, 7 February. The 2050 call, 25-cent limit order. That's more than 1%. Okay. Dustin, we already looked at SPY and it's a no. Okay, Old Town Comics, DJT. That's a brand new company, dude. It's got to have at least 20 years of dividends. I don't think they have any yet. Can you show how to make an up? Okay, we just did that one. Just did that one. Tra-la-la-la. William loves Pfizer. If they have a decent earnings this week, we could have bid move to the upside. Okay. Okay, Henry, I don't do XRP, but thank you for offering your tidbits of wisdom there. What else we got? Oh, right here. Jonathan, good evening, sir. What stocks are you playing this week in this account? Oh, see, you're aware I got like 3. I got 7, damn it. 7 damn accounts. So this week, got Foot Locker, Harley Davidson, Kohl's, Mara, MPW, Riot. I know I have US Steel and a couple of other accounts. I just got a question on YouTube. What do you feel about DDOG? Sorry, Jesus. DDOG, I've never heard of that. DDOG. Datadog. 142. And it has weekly options. Interesting. Well, let's see how much the dividends are. DDOG. DDOG. Okay, Yahoo Finance, Datadog, $142. Oh, this is probably why I've never heard of them. No dividends. Okay, see right there? Forward dividend and yield, nothing. EX dividend date, nothing. No dividends, no thank you. Ask yourself a question. Why would you come to a dividend show, dividend investing show, and offer a company that has no dividends? That makes no sense to me, brother. After hours, $6, Jesus. I see that. Let's go here. Okay, DDOG is a no. That's a no. Oh, you already own the stock. Can you show to sell a call? Yeah, I already did that one. When you own the stock already, all you're doing is you count how many shares you have. You need 100 shares to sell 1 covered call. 500 shares, 5 covered calls. Okay, 10, same thing. All right? Basically, all you're doing is you're selling a stock option against them. So if I was going to sell a stock option against this, I would just click on here. Sell. It fills on its own. Okay, 10 contracts, 11, 12, 13, 14. See the number right here, keep changing. 18 contracts, whatever. You can set your own price, limit order, blah, blah, blah. My apologies, didn't know this was dividend stocks only. You're welcome there, Jesus. So I hit confirm and send. Sell 22 DDOG, okay? And it just tells you exactly what you're doing. And I always tell people, read it out loud so you know exactly the way it sounds is exactly what you want to do. I see the news for Walgreens Dividend, and I thought about you. Oliver Twist, thank you. Bradley, pay yourself first. People don't fail to plan. They plan to fail. Hey, Alexa, play smooth jazz. There you go. All right. Okay, Bradley, I got that one. Pay yourself first. What's your yearly profit margin? My yearly profit margin? Well, last year it was 63. The year before, I think it was like 40, 45, somewhere in that area. Did you believe in leveraging margin? Of course I do. James, any opinion on how tariffs will affect the market in the morning? Yeah, you want to know how the tariffs are going to affect the market in the morning? Buy American stuff. You won't have to worry about imports. Simple. Stop buying stuff from overseas. If it's made overseas and brought here, more than likely it's made here somewhere. So stop buying overseas. Stop supporting economies on the other side of the planet. Support your brothers, your sisters, your aunts, your uncles, the guy down the street. Okay, this is your American brothers and sisters. Buy American stuff. Anyway. Profit percentage. Yeah. Well, last year was 63%. Okay, hope that answered your question. Rod. Okay, we just did that question right there. People don't plan. Yep. With my profit margin. Yep. Profit percentage. Yeah, I'm looking at 1% per week. My average last year was 1.2. Be careful putting any orders in tonight before the opening. KG got that one. Hello, I don't buy overseas. Well, if you're worried, James, I saw that. Yeah, okay, if those that are worried about the tariffs, yeah, it's only for stuff coming in from somewhere else. Stop buying stuff from somewhere else, then it shouldn't affect you whatsoever. Are you loving today's sales? I have no idea. There wasn't any sales today. Next decade. I'm not quite sure, William, what you mean by that one. Okay, Scott Thacker 13. So when selling covered calls on a stock you already own, you do a limit order. Yes. Now, the reason why I do a limit order with stocks I already own, because I know what I paid for it. And if I want to make sure I get my 1% or more and not the market price, the market price fills it whatever it is. It might not hit my 1%. So when I own a stock and I sell, yeah, I always sell limit order because I want a good idea. Nerva, hello. What do you think about RGTI? Okay, wait a second. RGTI. I'm pretty sure they have no dividends at all. So I'm kind of curious why you'd be asking me to take a look at RGTI. RGTI. Okay. Forward dividend yield. No dividends. EX dividend date. No dividends. Okay. RGTI. No dividends. No thank you. Should you reinvest dividends or cash them out? Okay. Say, Todd, I don't know where you are in this point in your life. Okay, I'm 61 years old. Means I need a steady income. I need cash flow coming in. Now, normally, when people retire, they take all their money and they give it to their banker or their hedge fund manager or a money manager or someone. Or they keep it in their 401k and they let that person take care of it. Okay, well, under that plan, I'd still be working. Because what they're averaging, they tell you need to take anywhere between 4 to 6% yearly draw off the money you have. Well, that's not even going to take care of me for a month or two. Okay? So that doesn't work for me. So I need cash flow. So every week I use the money that I collect to pay my bills. Okay? Some people, they have the opportunity to just take all that money, just keep doubling it. Because when you consistently get 1% every week, you're going to double your money every 16 months. See, 16 months is not bad to double your money. Okay? But for me, I spend most of that money because those pays my bills. All right. Venture Global. Never heard of it, William. Sorry. What do you feel about JS? Never heard of it. MY? Never heard of it. D? Well, I've actually heard of D. That's Dominion. What the heck is S? JS. Jasper Therapeutics. No. Okay. MY. What the hell is that? No options. Yeah, no. D. Well, at least you went named one that I know of, Dominion. But Dominion, it's monthly. That's a no also. So 3737, whatever, it's going to be a no for all three of those. You batting 1,000 there, brother. Okay, Steve, XYZ Steve wants O Realty. So, Steve, were you paying attention? Because I'm kind of curious. Because if you were paying attention, okay, I said no monthly options. February, March, June, September, January, March. Yeah, those are all months, dude. That's a monthly optionable stock, which means I can only trade that once per month. Once per month is only 12 times per year. So I'm only making 12 to 24% per year. Okay, it might be good for you. No, for me. I like weekly options. Weekly options allows me 1% a week. That's more than 50% a year. Okay, 1% a month doesn't work for me. Doesn't work. Selling Monday in anticipation of recession. Any better alternative? Doug, why would you even say that word? Because you say that word, then someone else is going to repeat it. Then someone else is going to repeat it, and so on and so forth. And then the more people think of it, the more people say it, then it occurs, and they say, oh, yeah, I knew it was coming. Well, you're telling it to come. If you never use the word, and you just consistently go about business as usual, okay? You work, you contribute to society, you come back, and you take care of your family. It's really not that difficult. Okay, when you start coming home and tell your wife, say, hey, I think there's a recession coming in, we're not going to spend our money. So you end up holding your money, and then it slows down the circulation. So that the guy at the corner store, he's got to stop. No, you don't even want to say those kind of words, because what you, as a man thinketh, so becomes he. I'm not religious, but I know that if you keep your mind on it, you can actually attract it into your life. It makes no sense. What was he thinking? Thank you, Charlie Wally. Is it possible to have two paper accounts on TOS? Yeah, Laurie, there is. Knight 3440 PLTR. Okay, so Knight 3440. When I said 5 simple rules, never buy something you don't understand. So I'm pretty sure you understand completely about PLTR. And then you understand that PLTR doesn't have dividends. Yet you're at a dividend investing show asking about something that the company you like doesn't have. Explain to me how that makes sense. If the name of the show is Dividend Investing for Weekly Cash Flow, yet the company you like, PLTR, has no dividends, do you see there's something missing here? Frank, I'm down $195,000 on XRP. Okay, so Frank, you're asking me a question that I cannot answer for you because I don't do cryptocurrency. Okay, now a lot of people, okay, Frank, a lot of people saying XRP is wonderful. Well, it doesn't look like it's that wonderful for you, Frank, because you're down 195. So I'm not quite sure what to say. See, one of the reasons I don't do cryptocurrency, because there's no consistent way to be profitable other than sitting in front of the computer all day long looking for moments to jump in, jump out. I don't do it. So I can't help you out there, Frank. I don't do cryptocurrency. KK7BD. All right. Can you reset all your position history? Yes, you can. All right. Come over to the monitor section. Okay. Right click on any stock. Okay. Right click on any stock. The fourth one down. Reset all positions for the paper trading account. Let's keep on going through these questions. What about Venture Global or Next Decade? Okay, William. William, I don't tell people what to buy, okay? Honestly, I don't. You like those companies, you want to put your money into it, great. Me, I only like companies that are consistently profitable, okay? I haven't heard of either one of these. Now, I have heard of Ford, I have heard of General Motors, General Electric, IBM, AT&T, Pfizer, Wells Fargo, Capital One Finance, MasterCard, Visa, Home Depot. Did I already say those two? Colgate, Palmolive, and a whole bunch of others. Companies that are over 50 years old, over 100 years old. Companies I've heard of growing up my whole life. Clorox, Colgate, Palmolive, Procter and Gamble. These companies I've heard of. They've actually part of my life growing up. I know who they are. I know what they do. I don't buy stuff I've never heard of. Venture Global, never heard of them. Next Decade, never. I've heard the words. Well, what happens in the next decade? I have never heard of the company. Okay? Now, why can't you ask me something like Ford, General Motors, IBM, AT&T, BMW, Volkswagen, something that we've all heard of? So basically saying, Frank, that's a no. Sorry. Let's keep on keeping on. Ooh. La 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 la. Selling money anticipation. Okay, makes no sense. Okay, got it. Is it possible? Yes, it is. PLTR, invest, blah, 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 blah. America first, thank you. That doesn't work. Look at Russia. Okay. Tolly Wally, I'm not quite sure what you're talking about that doesn't work. Okay, Frank, I'm down 195 XRP. You already said that. You're going to answer my previous post question. All right, Doug. You're not the only one on the dance floor, brother, trying to find the question you asked. I try to go through each and every single question. Unless you... So, all right. I did answer your question. Your question, selling on Monday in anticipation of recession. Any better alternatives? Yeah, don't sell. I never sell at a loss. Okay, most companies I do have been around for quite a while. Okay, we already did those questions. Okay, did that one. Next decade. Yeah, William, I get that. Next decade is a stock. Now, it's not like Starbucks where there's one around every corner. It's not like McDonald's where there's one in every single town. Macy's. Every single big city has a Macy's. Kohl's. A whole bunch of other ones. America or Canadian dividend stock. This is American dividend stocks. Sorry. HPE. Ben, what is HPE? HPE. HP. Why have I never heard of HPE? Hewlett Packard. Ooh, lovely. Hewlett Packard. Yeah, Cake, you have to remember that one. Okay, so HPE, Hewlett Packard. Here's our high, here's our low, here's where it was, here's where it is. Look at this. Up, down, up, down. We're at 21.19. So 21.19 was the last trade. The current price is 21.92. So we're looking at the 21s, 57 cents. That's more than 2%. Well, that sounds good, right? More than 2% a week is over 100% a year. So the question you should be asking yourself, do I like Hewlett Packard Enterprise? Is it different than HPQ, which is Hewlett Packard? HPE is Hewlett Packard Enterprise. What's the difference between the two? So the question is, do you like this company and is it the right time to buy? Well, let's take a look at what the chart's saying. Well, a year ago, let's move this over a little bit. Move that over a little bit so we can see it bigger. A year ago, Hewlett Packard Enterprise was at 15. And she drops to 1450 on March 1st last year. Well, the last 90 days, what are we looking for? Again, 5 things. The high, the low, where was it, where is it, and what's the motion? Up, down, up, down, up, down. Well, it's down in a down cycle. It doesn't make sense to buy it. But you know what it does? Let's take a look at the 30 days. Hold on a second. Because at 30 days, you're going to change your tune. Ready? Here we go. Look at the 30-day chart. 30 days ago, we're at 2150. shoots up to 24.60. Then she drops back down to 20.40. That's a 30-day bottom. What usually happens on a 30-day bottom? Stock has a tendency to go up. Look what happened on Friday. Thursday is your new bottom. Can't argue with that. Friday was a little higher. I like 2 days to the upside. So if Monday is an up day, well then I would be getting in on Tuesday because I like 2 days going up. That tells me that's the bottom. See right here? Bottom, 2 days to the upside. Jump in on the third day, take it for the rest of the ride. There's the bottom. I like 2 days, and then jump in. So what does it look like? Well, let's take a look. Oh, wait a second. Wait up. Hold up. Hold up. Let's back up. Back the truck up for a second. Let's take a look at seasonality. Now, like I said before, stocks only move for two reasons. One is a reason that we can plan for, which is called a known reason, which we know something's going to happen. Well, you have earnings reports, you have stocks, what do you call it, dividends, when the payouts are. You have stock splits, you have certain items that happen every single year. What's that? Winter, spring, summer, fall. New Year's, Christmas, Thanksgiving, Easter, every major holiday. How does a stock react towards a holiday? Or towards a winter, spring, summer, fall. Seasonality just tells you over and over and over again. Now, what we're looking at here, this is a seasonality chart. Okay, the blue line represents the movement this year so far. You see it's already past the first line. Well, the first line, there's 12 of them. See them? 12. Okay. January, February, March, April, May, June, July, so on and so forth. Okay, here's January. She went up, she pulled back. Well, here we are right now in February. The red line represents 10 years worth of movement. What does a stock normally do? Well, look right back here in November. The stock has a tendency to go up in November right up until just before Christmas. Well, that's a good thing to know. Write it on your calendar. Get your calendar up. Go all the way to November. Write it down. HPE has a tendency to go up in the first couple of weeks of November. That's a possible trade in November. All right, so anyway, here's the last 30 days. Here's where we are. So what do we have coming up? Here's where we are right now. Right there. So it looks like she has a nice upward tilt for the next 2 or 3 weeks. Should I keep my, what the heck is that? I didn't see that. Okay, Game Kid, I can't answer PLTR. I don't like that company. I don't even bother looking at it. No dividends, no thank you. All right, so the seasonality basically says over the last 10 years, that's 2015, 2016, 2017, 2018, 19, 20, 21, so on and so forth. The last 10 years, what is the average normal movement? If that's what it is, hey, I have no problem with it. Okay, PLTR, let me see if I can say this a little bit slower for those of you in the background. Okay, for those of you in the cheap seats, way up in the bleachers, yeah. I don't do stocks that don't have dividends for the most part. There are a few that I make exceptions for, and those are the ones on Warren Buffett's list. If it's on Warren Buffett's list, yeah, I'll take a look at them. Okay? Now, I know that Apple does not have 20 years of dividends, but it's on Warren Buffett's list, so I will buy it. Kinder Morgan, well, definitely yes on Kinder Morgan. Kinder Morgan, they're dividend king. Okay, they have increased their dividends for more than 5 decades. That's 50 years. That's probably older than some of you people in the audience. All right, so Hewlett Packard, HPE. Let's take a look at an actual trade and see what the numbers look like for those of you that want to see how it actually works. Simple, safe, predictable, consistent. 1% per week. Let's take a look. It's called a covered call. Buy the stock, sell somebody the rights to buy it from you. That doesn't mean you're selling the stock. You're just selling the rights. It's kind of like layaway, or kind of like taking a deposit, a non-refundable deposit. It's like if you're going to buy something, here's a deposit. Hold it for me. I will be back on Friday to pick it up. Well, if the stock goes up, yeah, they're going to come by and pick it up. If the stock goes down, most likely it's just, let it go. That's basically what a stock option is in this context. Because I'm buying the stock at the current price, $20.92. That's the current price. So if I'm buying at $20.92, I'm going to sell somebody the rights to buy it from me at $21, which is more than I paid for it. Okay, fine, a little bit. For that privilege, I'm going to collect 57 cents a share. Now that is more than 2%. It's simple math. You take the $20.92, $20.92. You take that decimal point, move it over 2 places. What is 1% of $20.92? $20.92. 1% is 20 cents. Well, 20 cents and 9/10, so it's about 21 cents. Okay, just move the decimal point over 2 places. 0.209. Okay, right now it's 20.9. That's $20.90. So 1% is just 20 cents. Okay, that's 1%. I'm looking to get 1, but I'm getting 2. Let's actually do 1 and see what happens. Right here, where it says single spread, we're going to change that to covered call, because that's the strategy I want to use. Covered call, there we go. And I like the 21, which is right here. Okay, hit the buy button. Now I'm just going to do 1 contract so you see what the numbers look like. Market order. And here what it looks like. Buy 1 covered call, HPE 100s. That's the weekly option for Hewlett Packard. What's HPE? Hewlett Packard Enterprise, something like that. 7 February 25. That is this coming Friday. The $21 call option against the HPE stock at the market price to fill first thing tomorrow morning. Market price fills first thing tomorrow morning. Limit order will fill whenever it hits that number. Big difference between limit order and market order. I like doing market orders first thing in the morning because I've already decided this is the company I want. And the order I have, okay, that's the order. Max profit, $69. Well, let's get the calculator up. What does that mean? Now that's $69 per contract. Clear. $69 per contract. And then we take and we divide it by how much money. What is the cost of the trade including commissions? $2,031. 2031. And that comes to a grand total of 3.3% for 1 week. Well, that's better than 2%. So think about it. Does 3% a week sound enticing? Do you like Hewlett Packard Enterprises? That's the question. Well, question number 1 should be, does it make sense? Question number 2 should be, do I like Hewlett Packard, HPE? There's a difference between HPE and HPQ. Let's take a look at HPQ so you can understand. Okay, let's get rid of this. Let's get rid of that. Let's get rid of that. Let's get rid of this. And put in HPQ, Hewlett Packard. Now there's a difference between Hewlett Packard and Hewlett Packard Enterprise. Okay, so here's HPQ. High, low, where was it? Where is it? What's the direction? Up, sideways, down, sideways. Okay, simple enough. Oh, that was a good one. Whew. Ooh, shaking in my shoes. Right back to single. Here we go. So currently, if I was going to buy it first thing tomorrow morning, $32 even. So what's the 32 going for? Well, the 32 is going for 82. That's more than 1%. So do you like Hewlett Packard? Well, let's take a look. What's the chart telling me? Is it a good time to buy? Well, the numbers look good. Okay? I know who the company is. I know what they do. I'm okay with buying them and owning them and holding them long term. These are the questions you should ask. Do I like this company? Do I want to own it long term? Okay? Now, let's take a look at what the chart is telling us. A year ago, Hewlett Packard was at 28.74. Well, the bottom of the year was in mid to end of April, 27.37. Right? The high of the year was within the last 90 days, and that was here at the end of November, and that was 39.80. So 39.80 is the high of the year, and that was just the last 90 days. Take a look. The high, here's the low. That's where it was. This is where it is. Okay, she went up, she went down, she went up, she went down. Now she's going sideways. Okay, does that make sense? Now, I honestly don't like saying sideways. I should say it's channeling. It's staying between 32 and 34, just going sideways. It's just channeling. Let's take a look at the last 30 days. The last 30 days, January 1st, here we go. High, low, where was it? Where is it? Look at it again. Up, down, channeling to the side. But look, it's here. This is going a slight downward. See that slight downward trend right there? So maybe it might not be a great idea. But here's your bottom here. 30-day bottom. She shoots up. Now she's coming down. Eventually, maybe in another week or so, this will hit a new bottom and then turn up and go back up. Because that's what they do. They go up, then they come down. They get to a certain point, they turn around and they go back up again. Well, HPE, yes for this week. HPQ, no for this week. But that's just my opinion. You guys should never listen to somebody on YouTube or TikTok. You know, I'm just showing you a couple ideas. Do your own research. Does it make sense? Okay? Understand that there are risks involved. Buying a stock, you own a portion of the company. Yeah, you're entitled to a portion of their profits. Why do most people lose? Well, most people lose because they're doing it, not doing the complete research, not understanding exactly what it is you're doing. Okay, if you buy Hewlett Packard, you own a portion of the company. Do you understand what the risks are? Well, the risk is the company can go up or down, well, 50% from where it is. There is a 52-week high. There is a 52-week low. It goes up, it goes down, it goes up, it goes down. There is an absolute cost, there's an absolute value. What is that? That's called the book value. Well, if Hewlett Packard sold off everything they have the rights to and everything they own, well, what is that per share for you? That's called the book value. Okay, now I don't like stocks where the book value is so astronomically low and the stock price is just crazy. I'll give you a perfect example. NVIDIA, the book value is $1.74. Well, why is the stock $140 a share? Worse than that, the dividend is 1 penny. Worse than that, why the hell are people buying it? If you're buying a stock, okay, it pays 1 cent dividend, $140 to get 1 cent per quarter. That's 4 cents a year. 4 cents a year on $140. That's a horrible return. The book value, if the court had ordered them to liquidate and pay off the investors, you get $1.74 because that's what the bottom line is. That's what's called the book value. You talk to the bookkeeper. Okay, what do we owe? What do we own? Well, what's our book value? What's our net asset value? Johnny, what's happening? John Corey, what's happening? All right, so let's do this. So HPQ, no, HPE, yes. Okay, we got two we want to look at, two requests. Intel and Walgreens. John, yeah, life's happening. I went to a baby shower today. That was fun. All right. Intel, and then Walgreens. Intel, INTC. First thing, always. Sup? What's up, John? Okay. Always 1 year chart. It's the very first thing. It takes you should take you 3 seconds. Seriously, 3 seconds, because every picture tells a story. Was it every picture tells a story? Don't was it? Wasn't that the Rolling Stones? Every picture tells a story. All right. The high, 47. The low, 18. So the high is 47, the low is 18. That's an over 50% spread between the two. 18 to 40, yeah, that's a big spread. It's currently at 19. Okay. down, up, down, up, down, up, down. Okay, doesn't look the greatest at this moment, but let's take a look. 1943 at this moment is the current price. 1943. Now this is not good. This is just a little clue, okay, little clue. The last trade, 1943. See right here, 1943, that's the last trade on Friday. At this moment in time, the bid is 1884, the ask is 1886. Both of these are lower than the last traded price. Basically, all that means, usually, the market maker is going to push the price down tomorrow. Well, look at the momentum. Okay, 30 days ago we're here, she comes down, shoots up, pulls back. Okay, now she's coming back. Your profit's here. Your 30-day low, your 30-day high, profit taken brings the stock down. So somewhere in the next few days, this thing's going to turn around and start going back up. That's the time you want to jump in. Now, I already own some Intel, so yeah, more than likely, I'd probably buy some more if everything's right. So let's take a look. At this moment in time, holy shit. That's nice. Take a look at the numbers. If I buy it at 1884, 1886, that's the current price. I sell somebody the rights to buy it from me. The closest one's going to be the 19, of course. 1886, the closest strike price. 19, they're right here, see? 1750, 18, 1850, 19, 1950, 20, 2050, 21, so on and so forth. The closest one is the 19, and it's going for 81 cents per share. Ooh, Joe wants to know how to do a leap for Intel. Now, Joe, I do that not here. Okay, so I've been trading for over 20 years. I know a lot. I'm giving this information to all you for free. I'm not charging anyone for this. I'm not asking for anything. Do I have stuff to sell? Yeah, I have stuff to sell. I've written 14 books. I have a course. I have a morning trading group. It's a paid for group. Yeah, I have all that stuff. But I'm not trying to sell anyone anything. Not once will you hear me say, hey, you need to buy my stuff. No, you don't. Okay? But I forget what he just asked me. Oh, that trading strategy. Yes, I do that, but I don't give it away for free. So what I want you guys to think in the back of your head, this guy is giving away this trading strategy for free. Simple, safe, predictable, consistent. I created it for my 9-year-old so she wouldn't lose, she wouldn't cry, I wouldn't be sleeping on the couch. You know how that goes. So, that being said, if this strategy makes 50% per year, what do you think I have up my sleeve that I am charging for? That's what I'm trying to help. If I can get you to 50% per year, I'm thinking maybe somewhere someone might want to buy something for me. I'm not trying to sell anyone anything, but that's what I'm trying to do. Also, I'm just cataloging my trading life for my kids and my grandchildren, all right? So my daughter can go back and say, yeah, I remember that when I was 11 we made that video that day. Because I remember that day very particularly. She was drinking iced tea in a big huge glass, and she was just goofing around, and we were having fun. That's why you see me, yeah, you know, because I had to make it fun and exciting for her. Anyway, let's keep on going away. So Intel. At this moment in time, it is, for me, it is a no, but I already own it, but I'm not thinking of getting any more until this stops. Okay? You get your bottom right here, 1875, and here's your high, 2250. Well, what's the difference between the bottom and the top? And it's very important that you know that because it's a mathematical equation. 1875 to 21.75 is $3. So that's $3.50. $3.50 move on an $18 stock. 6. That's 20. That's almost a 20% increase from here to here. So a 10% increase would be $1.80. 20% increase would be $3 something, $3.50? No, $3.40. Okay, somewhere that $3.50, $3.60. But that's almost a 20% increase. So ask yourself this question: if you bought a stock when it's at the bottom, because you buy low, you sell high. If low is here, okay, and you buy it, and all of a sudden you're up 20%, do you sell? Well, hell yeah, of course you do. And then once you sell, so does everyone else, and it starts to drop. And it goes down to a certain point where people like you and me says, holy cow, Intel at 1850? Yeah, I'm going to buy some. Then the whole thing starts over again. Finds the bottom, turns around, goes back up. Well, I'm going to put Intel down for next week because it's not quite ready for this week. Okay, but next week it might be. But look at the numbers. 81. Let's do one right now just to give you an idea, because Intel is one of those few companies that has great premiums all the time. So let's take a look. What does the premium look like? Calculator. Oh, wait a minute. We don't need the calculator yet. Let's actually do a trade. Okay, so the 1940s, I'm going to look at 1950. Okay, let's take a look at the 1950. Sorry, I meant the 1850. Whoa. Hold on. It's currently at 1887, so the 19. That's what we're looking at. 1887, so we're looking at the 19. That's the closest one. Okay, so let's go. Or the 1850. If the stock is going down, think about this for a second. Hold on. Think about this for a second. If a stock is at 1943 now, that's the last traded price. Now the market maker is trying to push it down because he's dropping the price here, 1886, 1887. So he's going for the 19 right here, this area. So what if I sold the 1850s? I bought it at 1880, and I sell it at 1850, which is lower. So if she continues to stay right where she is or drops down a little bit low, the 1850 is not even on this chart. Well, the 19 is right here. If I sell the 18, I'm going to get this nice fat premium. And then if she stays above that by Friday, well, I'll have all my money back and a nice profit. And, well, I'm already okay with owning it because I like Intel. And I don't mind owning Intel at 1950 or 1850, whatever the price is. Okay, so let's do the 1850s. All right, right there. I'm going to, like, again, we're going to change his right here to covered call. Okay, covered stock right there. Okay, the 1850s right here. Okay, just one contract. Okay, at the market because I want to fill first thing in the morning. I honestly don't care what the opens as. Reason being because I already know what my profit's going to be. $79.50 because I'm buying the stock and selling the option at the exact same time. They're tied together. I already know that. Am I okay with owning it at the market price? Well, yeah. I don't mind buying it at 20, 21, 22, or even down to 16, 17. Anywhere in that area, I'm perfectly fine. I'm perfectly fine. You got to ask yourself the question, do I like Intel? Okay, do I like Intel at this price? Okay, look at the flow. Where's it going? Well, right now it's in a little bit of a downturn, but here's the thing. We're going to get to that in a second. Hold on. Let's just go over the numbers real quick. So, 79.50. Oh, wait, before that. By one covered call, Intel, 100, that's the weekly. 7 February, that's this coming Friday. The 18.5, $18.50 call strike against the stock at the market. As soon as she opens, this will fill. And then I will sell that one at the market as soon as the market opens. So here's my profit, 79. Look at my break even, $17.70. That's break even. Okay, the stock is at the moment 19. The break even is 17.70. The stock is already above that. That's a long way to go down. So if it goes up, I make money. If it stays the same, I make money. It can even come down and I'm still making money. And it is Intel. And they've consistently increased their dividends. Where are they now? Okay. Not the top of the list, but they're on the list. All right. Max profit here, $79.50. Clear, $79.50. And I divide it by, what's it costing me? Total cost of the trade plus commissions, $1,771. $1,771.15 for one contract. That's 100 shares. That gives me 4.4%. Well, I can do 4.4% because 4% a week is 200% a year. Actually, more than 200% a year. How would you like to double your money every 6 months? That would be great. Does it always work? No, it doesn't. It happens once in a while. Once in a while, you'll find a trade that'll give you 2, 3, 4%. Well, this one, 4%. 4.5% actually. I'm going to write that one down and circle it for tomorrow because I like Intel. All righty. Let's get out of that. Let's get out of that. Let's get out of this. Let's go back to there. And here we are. Okay, so I do like Intel. The numbers do look great. I would feel much better if we found a new bottom. John, so I see you're using a margin account. So would you actually buy this with your margin? Oh, hell yeah, John. See, John, what you fail to recognize. Now, you're new here. I understand that. Perfectly acceptable. You're new here. 98% of all my money is invested at all times. The reason being is I believe in my brothers and sisters, my aunts, my uncles, the guys down the street, the guy down this, 3 blocks over, the guy up in Toledo, Ohio. This is America. What do? We get up, we go to work. We contribute to society. Okay? We contribute to society, we get rewarded for our efforts. Great. We take a portion of that money, we invest it, and those people, just like me, just like you, consistently working every single day to put food on the table, have a better life for their children and their families. That's the American economy. We all looking for the same thing. Safety, prosperity for our family and friends. We want our family and friends to be safe and prosperous. Well, basically everyone does. Okay, you go to other countries. They all want what's best for them and their families. It's not until you get a bully who messes things up. All right, anyway, that being said, I like Intel. I have no problem whatsoever. The reason I have all my money invested in the American economy, because I believe in the American economy. Okay, this is where I live. Okay, I buy my stuff at Home Depot or Lowe's or Ace Hardware. Okay, I go to Walmart, I buy stuff there. I get my gasoline to move my car around. Okay, I buy stuff in America and I believe in the American economy. But that's me. You guys got to figure out what's right for you. All right. And I don't believe in leaving money just sitting around. Because leaving money sitting around, even though any money I leave in my brokerage account, I get 4% a year, that doesn't work for me. Okay, so I'd rather invest it into a company and do a covered call every single week, because I do have stocks that have more than 4 or 5 months, but I only keep them because it consistently gives me a cash flow on a weekly basis. So I have a couple like Harley Davidson. I think I bought it back in November. Okay, I still own it, but I'm still getting 1% every week. What else do I have? U.S. Steel. I bought that. I think it was like 141, and it's currently at like 130. So I'm down $10 on the stock, but I gained 1.5% every single week from doing a covered call on it. Let's take a look. Okay, we just did this one, didn't we? Yeah, we did. So let's take a look at U.S. Steel for the fun of it, because I do own some at 141. Okay, so people always ask that question. Well, what happens if the stock goes down? Well, what do you think's going to happen? You got 2 choices. Well, you got a bunch of choices. You sell it, you keep it, one or the other. You can write a covered call against it. Now, I hear a lot from people, well, it's too risky to write a covered call. What if it jumps up? There are answers to that question. Okay, I bought it at 41. 41 is up here. Okay, I bought it back in November. Look, it dropped all the way down here. Now it's coming back up. It's at 36 now. It's still $5 less than what I paid for it. Am I panicking? No, because I'm getting a consistent cash flow from it. Let's take a look at U.S. Steel just for the fun of it. Here's the high, 48. That was back, March, looks like. Hold on, I'll give you the exact date. Okay, the high of the year, 48. And that was back at the beginning of March. Okay, the bottom of the year, here it is. September 4th. Okay? Down, up, down, up. Now she's in a little bit of a channel. Fine. Doesn't change the fact that I still own it at 41. 41's way up here. Let's continue to take a deeper look. So the last 30 days. Okay? Now, this, for me, looks horrible. Let me tell you why it looks horrible for me. Because remember, I said I own it at 41? Well, you see 41 on the chart? No, you don't. 41 is way up here. Right? Right now, it's at 36, 37, 38, 39, 40, 41. Way the hell up here. I'm not selling it for what I paid for it. But what am I getting? Okay, so let's look at this right here. So here we are right here at 36.85. Take a look at all the strike prices. Okay, 34.50, 35, 35.50, 36, 36.50, 37, 37.50, so on and so forth. Well, right here where the two colors split, here, the purple up here and the black down here, this is called at the money. This is where all the action's at. Okay, so the stock's at 37. I'm into it at 41. 41 is not even on this, so I'm going to go 3 strikes out to 38.50. It's going from 14 cents to $1.41. That's a big spread. I hate it when the market maker does this, but during the day, these numbers will be 5 or 10 cent spread, and I will get my 1%. Going 3 strikes out, I'm still getting my 1%. Great. What happens when the stock goes up? It's going to get closer to my strike price, but I don't want to sell it at that lower price because I want to move my strike price up. So I'm hoping if I sell the 38.50, I'm hoping that by Friday the stock will be below 38.50, and if that is, the stock will go. I will keep the stock, and the option will expire worthless. That's what I'm looking for the stock option to expire worthless. 80% of all options expire worthless, and that's what I'm hoping for. Okay, Alexa, next. You can't have a song with words in it because then Facebook will bitch and moan. All right, Kenny G, oh my goodness. That's another recognizable tune. Alexa, skip. That sounds better. So the option expires worthless, but you still collect the premium. Absolutely, John. It's like a non-refundable deposit. It's exactly the way you can look at it. If I own the stock at 41, I own it at 41. And you come up to me and say, hey, I like your stock at 41. Let me give you $50, hold it to me till Friday. If I come back on Friday, I will give you $41 for it. If on Friday the stock is worth $40.99, not quite 41, that person's not going to come back. They forfeit their deposit. I get to keep it. It's the exact same thing. You take a non-refundable deposit on something you already own. Okay? When the time's up, the time is up. So the option basically gives them the right, not the obligation, to buy it at a certain price, 41, by a certain date, 3:59 p.m. Friday, February 7th. That's what the weekly option is. 7 February, 14 February, 21 February, so on and so forth. Now, for those of you guys who are a little lazier than me and want a simpler process, well, here we go. Instead of 1 week, let's go 2 weeks out. So February 14th. So we should hypothetically catch twice as much premium. Give me a second, I'll answer that question. So what does 14 February look at the 38th? Well, it's 85 cents. That's 2%. Okay, 85 to 116. The 38.50, well, it's not as good. So I wouldn't do that one. I would do this week's, because 2 weeks is a higher probability of it being called out. And do I want to do that? No, I don't. See, the 38's going for 66. The 3850's going for 14. 14 to 145. Look at this one. It's going from 0 to 1. That's not the same. All right, John, perfect. Every time you say something about Alexa, my Alexa goes crazy since we're both in the same room. You want to hear something funny? I got Alexa in 3 different rooms, okay? So if I say Alexa, play smooth jazz, she plays one channel in one room and a different channel in the other room. So I'm hearing smooth jazz in one room. So I go into the other room, I think I should be hearing the same song, but no, different channel. That's weird. Okay, so if you have those little, those Alexa pucks, whatever you want to call those things, in different rooms, and you say it loud enough, she'll play different channels. It's funny, weird, disturbing, because it can be perfectly dark, and I say, Alexa, turn on the lights. And she's in the other room, and she turns on the lights in the room. That's just disturbing. Anyway, so you can choose what price you want to sell it for. If you buy it at a certain price, right now it's at $37.09. The closest strike price would be the 37. So this week's 37 is going for 130. Well, last week's 37 is going for 0 to 116. This one is going to be 130 to 198. So you get twice as much. So say you want to do it once every other week. You don't have to do it every week. Do it every other week. But the only challenge I have with every other week is trying to figure out where the stock is going for 2 weeks. 5 days is difficult enough. Well, 10 days is even more difficult. Because Friday, it looks like it's going down. Well, hypothetically, should continue to go down. But what happens when she goes down, finds the bottom, turns around, goes back up? And I sold 2 weeks up. See, I like doing 5 days at a time. I'm used to going to work every Monday morning, so that's what I want to do. It's easy for me. Alrighty. What do you think about Lunar? Joey, how are you today? Let's take a quick look at Lunar. L-U-N-R. Let's try that one more time. L-U-N-R. Okay, one quick look. Oh, good, thank you. How are you? Joey, I'm doing wonderful. Joey, to be the bearer of bad news, KMB. Isn't that Kimberly Clark, KMB? KMB. We'll take a look at that one. Hold on a second, hold that thought. Now, for Joey, Lunar, take a look what the high is, right here. Okay, now ask yourself, if making money in the stock market, you buy low and sell high, this is at a high at the moment. Why are we looking at it? Shouldn't we wait for it to drop back down, turn around, then go back up again? Hypothetically, that's what we should be doing. Okay, Joe Grudner. Hey, James, after your program, do you put your stock candidates on a list that's available to us? Yes, I do. Looking for puts. Ah, Joe, that makes sense. Thank you. Oh, Joey, if that's what you're looking for, there's your opportunity right there. Well, 6 months ago, you're at $4. Now you're at almost 22. Yeah, buying puts makes total sense if that's what you want to do. YMAX is a 1% dividend a week. Joshua, no, it's not. Do the tariffs increase the prices of MAGA gear since they're all... That's funny, Baker. Yes, Kimberly Clark. Yep, buy and hold. I see that. Ocean. I'm not understanding this, but yet reasons come and go. Okay. Steve-O. That's like saying craps at the craps table. That's funny. Jay Moore, how are you today? Heard about Walgreens dividends. Yep, I heard about it too. Verizon. Yep, we like Verizon. We'll take a gander at it. Feedback about your test run training strategy. Ooh, yeah, send me feedback. I prefer it in an email or a text. That way we can assemble it all together and come up with some kind of a strategy. Okay. I'm a messenger. I'm not even going to pay attention to that. Trumpet man. I'm not even going to pay attention to that one either. What do I think about JetBlue? They haven't been around for 20 years, brother. All righty. I'm down 40,000 on small cap stocks in 6 months. CQDX. Yeah, no. Sorry, dude. No, and no. All right, I can't read that name, Mo. Okay, I'm down 40,000 on small cap stocks in 6 months. Okay, brother, I can't help you out. Okay, I'm up. I think everybody in my trading group is up. I meant, do your Saturday training test run go well? Oh, it did, but I haven't gone through all the emails, all the text messages, because on Friday I like to turn my computer off and turn it on Sunday night. So I've only turned my computer on like an hour or so ago. Okay, I was having fun Saturday and Sunday, and I turned the computer off. I don't even turn it on and look at it. Nan, what platform do I use? I use Thinkorswim. I'm a buyer. How do I set up a paper trade account? I'm a buy you a drink. Oh, okay. There's a lot of different trading platforms that offer a paper trading account. Now, I always like to point people in the direction of Thinkorswim. The only reason it has so many different perks in it. You ain't getting 1% this week. Ooh, Sean, brother, you want to put money on it? Sean, I'm a gambling man. When I'm sure of what I'm, because I've been doing it for the past 15 years, so I'm pretty sure I'm going to make my 1% per this week. Okay, I got 7 different accounts. Okay, which one do you want to play with? Because I can pick one, or you can pick one. But I will bet you money that I make my 1% this week. Okay, all right. Man, what platform used this is Thinkorswim. What do you think about TEM? What the heck? Now, this is never a good thing when I have to say, what the heck company is that? Oh, and it does have weeklies. Imagine that. Okay, 57. Let's take a look at how consistently TEM pays dividends. TEM. Okay? I'm a big believer in companies that consistently increase their profits. Makes sense to me. Why would you invest in anything other than? This is probably why I've never heard of them. No dividends. Okay? It says right here, forward dividend and yield. Nothing. EX dividend date. Nothing. So if it doesn't have dividends, why are we looking at it? So, hey, that must answer your question. Oh boy. Alrighty. What kind of questions are we looking at? Okay, let's keep on keeping on. I heard about, oh yes, we're gonna do Walgreens. Let's do Walgreens right now. We said we're gonna do Walgreens. Let's do Walgreens. I do own some Walgreens, not a whole heck of a lot. Funny thing is, I had Walgreens in couple of weeks ago. Every single account had Walgreens in it. Now I have Walgreens in only one account because it got bought out. All those positions. Look where it is. All right. So now Walgreens is one of my better performing stocks for me because I don't trade like normal people trade. I don't look the high, the low, and get all panicky. No, I go 5 days at a time. I don't see Monday to Friday. What is it doing? I want to jump in on Monday. I want to be out on Friday. I want to have the odds and probabilities in my favor. Okay? A year ago, 24. The bottom, 8. That's a 75% decrease. Wait a minute. Sorry, that's a 66% decrease. Okay? 8, 16, 24. Yeah, that is a 60 66% decrease. And then she's channeling sideways, jumped up, pulled back. Now we're at 1028. Okay, 1028. Well, let's take a gander at it. At 10, that's the current price. 993, 1002. So if I buy it at 10 tomorrow, the 10 is going for 52 cents. That's over 4%. Now we found another stock trade that was 4%. I think that was Intel. iPhone storage is full. It's a brand new phone. How could it be full? That just makes no sense at all. Damn thing. Picked up Nike on the low. I'm still up. Cool beans. I gotta do something about that. Brand new phone should not be full after 4 days, 4 or 5 days. All right. That being said, let's take a look at Walgreens. Okay, there's our high, 24 a year ago, beginning of February. There's our bottom right here, middle of November, and that was 808. Can you imagine that, 808? Do you know what the book value for Walgreens? It's a hell of a lot higher than 808. That's the bottom. You can't get any lower than the low of the year. There it is right there, 808. Okay, jumped in, she shoots up to 14, and then pulls back again. Well, of course it's going to pull back again. 8's the bottom, she jumps up to 14. That's almost 80% increase. An 80% increase. Yeah, there's going to be profit taking. It's going to come back down, hit a bottom, turn around, go back up again. Because that's what they do. They go up, they go down. They go up, they go down. I've never seen one go sideways yet. They go up, they go down. That's it. All right, last 30 days. Last 30 days, here we are. $9. That's the bottom. 30 days ago. From $9, she jumps up to 14. From 9 to 14 is $5. That's more than 50%. Because the stock right here, 9. From 9 to 15, that's a 50% increase in 2 weeks. Well, hell yeah, it's going to be profit taking. Look, for 14, she drops down. Now she's at 950. Well, great. That's a great time to buy because it's coming down to the low. As soon as it finds the low, I want to jump back in and take it back up again once it turns. So let's take a look. What does seasonality look like? Seasonality for Walgreens, what does it normally do this time of year? Okay, well, that's not that bad. See, the next couple of weeks, okay, sideways with a very slight upward tilt. Well, that works for me. I like Walgreens. Let's see what a trade would look like for Walgreens. Not saying that it's a good idea to jump in while it's going down, but if this is the bottom, well, it's a great time to jump in. Okay, so right now it's at 1002. See the price? 1002, that's what I can buy it in the morning. So let's see what a trade would look like on Walgreens at 1002. Okay, the 10 right here, going for 65 to 52. Okay, that's over 5%. Well, that works for me. Okay, I'm going to change it from single down to covered. Now I like the 10 right here. Okay, now I want to buy just one contract. Oops, there it goes, there's one. And then I want to do market order. I could do the limit order, you know, but it doesn't make sense to me. All right, I'm going to hit confirm and send, and let's hear what it sounds like. Covered call Walgreens, WBA 100, that's the weeklies. Okay, 7 February 25, the $10 call option against the stock at the market to open. That's the trade right there. That's what it all sounds like. Means I'm buying one covered call of Walgreens. Well, that's what we're doing. Buying one covered call of Walgreens. The 100, which means it's the weeklies, okay, because it's a weekly optionable trade, okay, and that is the 7 February 25. Well, that's this coming Friday. Now, if I wanted to do next Friday, it would say 14 February 25, because that's next Friday. I can look at 28 February 25. Well, that's 3 Fridays away. I can pick whatever one I want. So the option contract I'm looking at only has 5 days to go. Okay, now normally I would stay away from those. But that being said, the numbers work for me. All right, so the break even is 943. Well, if I'm buying the stock at 10, oh, John, oh, I see in the upper left-hand corner, this is a paper trading. Yes, this one is. Okay, but look at here. Okay, real account, real account, real account. Okay, I don't use those on the weekends because on the weekend you get booted off and you have to sign back in on Monday morning. So I'll sign back in Monday morning and I'll show you guys those ones tomorrow night because they do all their, what do they call that? The updating on the weekends. Let's get out of there. All right, so that's the order. 56.50 is the profit for this contract. 944 is the cost for the contract. So let's do the quick math. 56.50 divided by 944. Well, that's not that bad. 944 equals 5.9%. Well, yeah, I'm writing that one down. Okay, so Kinder Morgan. Somebody wants to take a look at Kinder Morgan. All right, so Kinder Morgan's KMI. Let's get rid of this. Let's get rid of that. Let's get back to this, and let's get rid of this. All right, there we go. So that is Walgreens. I put that on my list for tomorrow. Kinder Morgan, KMI, is that right? KMB, Kimberly Clark. KMI, Kinder Morgan. KMB, Kimberly Clark. KMB, Kimberly Clark. 129. Take a look at the chart. 5 things. Remember 5? High, low. Where was it? Where is it? What's the movement? Down, up, down, up. Simple. Easy. Adults have a tendency to make it more complicated than it needs to be. It doesn't need to be complicated. It's not that hard. Down, up, down, up. It's not that difficult. Okay, great. That looks okay. What do the numbers look like? 130. The 130 is going for, I hate when this happens. They're not showing the numbers. Okay, 0 to 390. Well, 0 to 390, well, yeah, that's more than 1%. 390 is more than 1%. Anyway, that being said, let's take a look. A year ago, at 122.91. We bottomed out at the beginning of February, the mid-February, 117.60. Well, here's the top right here. The top, 149.31. Okay, that was the beginning of September. And then it's a slow trickle downward. Remember the 5 things we're looking for? The high, the low, where was it, where is it? Look at the movement now. Okay, down, up, down, up, down, up, down, up. That's a pattern. Down, up, down, up, down. Okay, so let's take a look at the last 30 days. So this is the last 90 days. It tells you one story, okay? 30 days tells you a whole different story. Okay, we're here at 132. We drop down to 124. Shoot up to 133. Well, now we're back down to 129. 129. Okay, down, up, down. The chart will tell you exactly what's happening with the stock. It's not that difficult to read it. What comes difficult is it looks overwhelming when you first get here. But once you understand it, once you compartmentalize, okay, this is the chart. What am I looking at? Well, at this moment in time, I'm looking at the last 30 days. 30 days ago, Friday. Okay, 30 days ago, Friday. What happened? It went down, it went up, now it's coming back down again. Not the best time to jump in, especially not when it's coming back down. Okay, once it gets to the bottom and turns around, goes back up, See, bottom. Okay, it's coming down. Here's the bottom. 1, 2. 2 days the upside. Third day, jump in, and she keeps going up. I like 2 days to the bottom after a 30-day high. 30-day high, coming down. Wherever the bottom is, that's where I want to watch. When is that going to be? Well, doesn't look like it's going to be tomorrow, because I like 2 days to the upside. Tomorrow would only give me one. All right, Verizon. Somebody wants to take a look at Verizon. VZ, Verizon. Going to say no to Verizon. The reason why we're saying no to Verizon, look at this. 30 days ago, here we are. Down, up, now she's coming down. So it looks like another week or two before we take a look at Verizon again. Louise says Verizon is no good. Well, a little late, Louise. I already said no. Okay. 30 day. Well, that's not 30 days ago. This is 30 days ago. Hey, that's 30 days ago. Up, down, up, down. Yeah, it just doesn't look right today. Let's keep on keeping on. No to JetBlue. Walmart is great. What do I think? Luis, why would I want Walmart? WMT. Nope. I'm not quite sure why you think this is good. Okay, it's good if you're selling, not if you're buying. Okay? The high of the year is not a time for buying. A high of the year is time for selling. But that's my opinion. What do I know? Don't listen to me. Do your own research. Okay, the numbers are what the numbers are. I've been holding for a while. It's been great. Yeah, I get it. Not a problem. But what's this? Let's go all the way back to a year ago. So, Luis, here's a question for you. Okay? You said you've been holding it for a while. So here's your question. Now, when I say sell it at a high, buy it at a low, 5 days at a time. That's it, 5 days at a time. Hold on. John, how come all your different feeds not synchronized? I'm not quite sure what you mean by that, John. Okay? So, Luis, my question would be, you like Walmart? Great. Why not buy it when it's low, sell it when it's high? What do I mean? Look. Low, it goes up, it comes down. It goes up, it comes down. It goes up, it comes down. Up, down, 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 up. Now it's time to sell, in my humble opinion. You can zoom in to any one of these little spaces. 30 days. Right? Here's your 30 days. Because it feels like it's always going up. Yeah. Terribly sorry, dude, but look. 4/21. This was last April. It went up, it came down. It went up, it came down. It went up, it came down. You can't argue with the numbers. You can argue with me all you want, but you can't argue with the numbers. It goes up, it went down. Up, down, up, down. So that's all I do, okay? If I'm jumping in at the bottom, take it for a ride, take the 1%, get out, take the 1%, get out, take the 1%, get out. It's a hell of a lot more than holding for a whole year and getting just, okay, but that's me, all right? Let's keep on going. All righty. Set up Paper Moon dividends on CSC and UVV. Paper Moon. I have no idea what Paper Moon is. But I can pull up J Moore. I can pull up on Yahoo Finance. That part's easy. Okay, come up to here. CMC. Oh, wait. No. You want to look at Cisco. CSCO. Okay, so here's Cisco. Now this is Yahoo Finance. This is where I go to look to see the dividends. Okay, over here in the bottom corner, okay, summary, news, research, chart, community, statistics, historical data. Historical data is what I want to look at. Okay, click on the historical data. Yeah, my internet's a little slow. Okay, and this gives me the information on Cisco. Okay, first row, the dates. January 31st, January 30th, 29th, 28th, 27th, 24th. They don't do the weekends. 23rd, 27th, so on and so forth. First column, the opening price of the day. Second column, the high price of the day. Third column, the low of the day. Fourth column, the close of the day. And then the last, the fifth column is the closed adjusted price. And then finally, the volume, how many shares traded that day. So if I want to look at just the dividends, see where it says historical prices? I want to click on that. And I want to look at dividends only. First thing that's going to pop up, February 2024 to February 2025. That's only 1 year, okay? Just 4 of them. That's all it's going to show me. So I want to click on this. Now I can look at year to date, 1 year, 5 years, and maximum. I want to take a look at all of them. Okay, so I'm going to go all the way back. How far is this going to give me? Okay, 2011. I thought Cisco paid more dividends than that. Well, there's 2 different Ciscos. All right, well, let's take a look at the dividends and see what we think. Luis, is JEPQ a type of stock you like? Decent price now? No. Now, just for you, Louis, you're new here, so I will show you why I don't like JEPQ, JEPQI. And then you decide. I'll show you where to find the numbers, and then you decide whether you like it or not. I'll tell you why I don't like it in a second. Let's finish up with this one. Now, I'm going to read you the dividends, and you tell me if it makes sense to you. Okay? 2011, 6 cents. Whoops. 6, 8, 14, 17, 19, 21, 26, 29, 33, 35, 36, 37, 38, 39, 40. Every single one was higher and higher and higher and higher. Okay, well, it sounds good, but me personally, I like 2 decades. That's 20 years. So this one's not quite 20 years, but do you like it? Let's see what the numbers look like. So Cisco, oh, that's just how you find the dividends. So Cisco, let's go back to here. Move this over. CSCO. Try it one more time. CSCO. There we go. Okay, so now ask yourself, does it make sense to buy Cisco? I can take one quick look at it and say, no, not for me, not this week, because it's too close to the 30-day high. I mean, not for the high of the year, sorry. I don't like buying at the high of the year, because with uncertainty with the new president in office, we have no idea what's going to happen. So if the company drops, it can drop 50%, which means it can come all the way down to the 30s. It could. Am I going to be okay with that? No, I don't like buying at the high. I will wait for it to come down. Let's take a look at the last 30 days. Okay. 30 days ago, we're at 59. She drops down to 58, shoots up to 63, pulls back to 59. 1, 2, 3, 4. 4 days to the upside. I don't know, maybe. But look at the distance between the bottom and where it is, and the top and where it is. Do you think it could still go up? It could. Let's take a look at the seasonality. Seasonality might make me change my mind. Wait a second. Before I even do that, what am I buying it for? 59.32. All right, well, the 59 is going for 170. Well, that's more than 1%. The 60 is going for 92. Well, that's more than 1.5%. So either one of these works. Let's take a look at the seasonality. What is that telling us? I'm going to do one more after this, then it's going to be answering questions. Normally, doesn't do a whole heck of a lot. Look, the blue line represents this year, the red line last 10 years average. Basically just going sideways. That's it, right there. Nothing to see here, folks. Okay? 3 February. Okay? 24 February. So this is the next 3 weeks. This is the whole month of February. Look, just going sideways, basically. So do I like it? Yeah, the numbers look okay. Is it the right time to buy? Could very well be. 30 days ago, we're at 59.50. She drops down to 58, shoots up a little 63, drops down here to 58.60, somewhere in that area, and 1, 2, 3, 4 days to the upside. Could I get a 1% for the next week? Maybe I could. 5 days, she could be up here in the 62 area. Could be. Okay. The Mortgage Magician. XRP is a scam. Okay. I bought some shares at 43. Okay. HP split into 2 companies. Yes, it did. Tyson's earnings. Okay, we're not going to be doing stocks anymore this evening. Only because, what time is it? It's 20 past 11. I'm usually done at 11:30. Okay, Greg Wynn, hold that thought. Oh, Lewis, yes, JEPQ. I'm going to tell you why I don't like JEPQ. That will be the last one of the evening, and then I'm just going to answer questions. All right, so for those of you who like JEPQ or JEPI or JEP whatever, JEPQ. Well, I see 2 things right off the bat. Well, number 1, too close to the high. Don't like playing in that playground. Number 2, it's a monthly optionable stock. But hold on, it gets worse. It does, believe me, okay, you don't have to believe me if you don't want to. Let's take a look at JEPQ. JEPQ. Now, I want you to pay attention closely to the numbers because you really should not be buying anything that does not make sense to you. So if you think JEPQ is good, you give me the assumption that you actually check these numbers. So I'm thinking to myself, what the hell are you thinking? So here we go, all the way back. Wait a second. JEPQ is only 3 years old. The very first dividend, 2022. It's a 3-year-old company. Why are you handing the keys to your brand new car, your brand new Lamborghini, your brand new Rolls Royce, your Maserati, whatever, even your pickup truck, your brand new pickup truck? Why are you giving it to a 3-year-old? The company's only 3 years old. But wait, it gets worse. You ready? Let's take a look at the dividends. Now, if a dividend is a portion of the company's profits, hypothetically speaking, shouldn't those profits increase year after year after year? And if the profits increase every year, the dividend should increase also. So I don't have to look at the quarterly reports. I don't have to listen to the annual reports or any of that stuff. I can go right to the dividends. If the dividend's higher and higher and higher, means it is more profitable year after year after year. It's simple math, okay? If you take a certain percentage of whatever the profit is, and you decide X percentage goes towards the dividends to the shareholders, that's you and me. If that goes to us, that portion of the profits, and the company is consistently profitable, that should consistently increase. And if it doesn't, that means they're not as profitable. It's that simple. If your dividend is down, that means the profits are down. Okay? So let's take a look at the numbers. 38, 34, they're starting off on a crappy position already. 38, okay, fine. 34, well, that's 4 cents less. That's more than 10%. So from the first dividend to the second dividend, you've lost 10% already. Explain how you think that is good. But wait, it gets worse. Okay, first month, first dividend, 38, 34, 41, 55, 38. Wait, that's a 17-cent drop. 17 cents on a $55. 17 is what percentage of 55? It's like 30%. It's a 30% decrease. You got a 10% decrease here, a 30% decrease here. Then it goes to 68 to 55. That's another 7. That's another 11% decrease. Look at the numbers. Does it make sense? This is a no where I come from. Okay? Well, you ready? We'll just do the high-low. Okay, ready? 38, 34. Lower. 41, 55, 38. Lower. That's twice. 38, 68, 55. Lower. That's 3 times. 58, 44. Lower. That's 4. 44, 43 is 5. 45, 48, 36. That's 6. 37, 37, 45, 42. That's 7. 42. 42, 34. That's 8. 38, 43. 45, 42. That's 9. 43, 56, 55. That's 10. 49. There's 11. 49, 51, 46. There's 12. 12. Yeah, 12, 10 and 2, that's 12 times this thing went backwards. So yeah, if the profits increase, the dividends increase. If the profits are less and less, the dividends get less. So it goes 1 step forward, 1 step back, 2 steps forward, 1 step back, 1 step forward, 1 step back. It makes no freaking sense to me whatsoever. No, I don't like JEPQ. I don't like JEPI. Take a look at the numbers. If you want something that's consistently profitable, either go right to the dividends or look at all the annual reports. The annual reports will tell you exactly, are they consistently profitable year after year after year after year. Read them if you want. It's not that difficult. Okay, so we got, 6 minutes left. All right, so let's read these questions. Greg Wynn, give us a scenario when your underlying stock drops substantially during the week. What do? Well, you chase it down with the dividends. I mean, not the dividends, the premiums. Okay, so you missed the early part where I told you I had US Steel at 41. Well, it's currently at 37, 38, something like that area. Okay, it's lower than what I paid for it. So yeah, I still sell covered calls against it. Okay, but I keep my eye on it, and I look at it twice a day. Once in the morning with my private morning trading group. It's a paid-for service. I'm not trying to sell anyone anything, but just telling you that it is. I look at it twice a day. Once in the morning when the market opens up, and once at night with you guys. So I have a good idea of where all my positions are at all times. What name is this? I have no idea what name you're looking for. Oh, I call it Dividend Capturing 2.0. The 81-cent premium on the 19 strike when it closed at 1943, that premium won't be 81 cents. Yeah, Joe, I understand that. Okay? What you're saying is, let's go back to where we were. I forget, Walgreens, WBA. So you're 100% right, Joe. The numbers that are reading here, that's not the right one. All these numbers here, those are the last numbers for Friday. Those are what the numbers were on Friday. So if this was the price on the closing day on Friday, right, those are what the numbers would look like. But when the market opens first thing tomorrow morning, all these numbers are going to change, every single one, and they constantly change. But what doesn't change is the math problem. What's the math problem? What's the stock at now? Well, that's A, Plus B is what is the closest strike price? That's B. What is C? The option price. What am I getting? Is this what I'm getting more than 1% of this? Okay. If that is, then it's a yes if everything else lines up. Remember, simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. Okay, so the numbers, yeah, it's more than 1%. That's my only concern. How much more than 1%? It may sound weird, really don't care. Isn't that weird? I don't really care. As long as it's more than 1%, I really don't care. I'm looking for safety and consistency of profitability. If the company's consistently profitable, it makes sense to me. It's actually that simple. Consistency of profitability and over 1%. Simple, safe, predictable, consistent, 1% per week. That's what I'm looking for. Do you know anything about 107 Alex is a stock club? Surge, never heard of it, but okay, kind of interesting. Dennis Mancini, Lockheed Martin. I'll have to look at it tomorrow because we got, what, 1 or 2 minutes before the day's over. Kimberly Clark liked it. I'm guessing Walgreens is a no. Well, Brian, it all depends on what you like. Okay, see, I like Walgreens. See, I have no problem buying Walgreens, but I would wait for the bottom first. Okay, see how it's dropping now? Okay, I would wait for a solid bottom for it to turn around before I would jump into it. But that's just me. What is all your other training courses listed? Hey, Laurie, how are you? Check out the Unruggable DYSNO. Okay, David, KMB, Kimberly Clark. Tomorrow scares me. Adam, I'm not quite sure why tomorrow would scare you. It's just the Monday, all right? All right, Bassmaster, Chevron. We'll have to take a look at that tomorrow. Sandy, Kohl's and Pfizer. We already looked at Pfizer earlier. Okay, but Kohl's, ask me tomorrow night. Andrea, Alcoa, AA. Why do you want to take a look at Alcoa? Okay, Andrea, I like the way the chart looks, except for what happened on Friday. Down, up, down. Right here, it turned around 2 days. Tuesday's your bottom. Wednesday's higher. Thursday's higher. Friday is higher also. A higher high and a higher low. So first thing tomorrow morning. Personally, I wouldn't jump in with a market order tomorrow morning. Okay, I'd wait until after the market opens to find out, is Friday a fluke with a down day? Because it looks like it closed lower than it opened, so it's kind of a down day. But it has a higher high and a higher low from Thursday, so it is your classic upward motion. But wait until after the market opens. See what it opens at. If it's higher, then it's a yes. Everything is going to crash. No way you're making money unless you buy puts and think you say you don't. Sean, thank you for your vote of confidence. And no, I don't buy puts. Terribly sorry. Okay, I have a certain method. It's been working for me for 15 years. And I'm pretty sure you can agree with me. A lot has happened in the last 15 years. Okay, if everything works out nicely, why wouldn't I? But we'll check it out, Sean. Okay, questions. VGTOT dividend stock, never heard of it. Dow futures is down 671 points. Okay, not quite sure what that means. VGT or dividend stock. Okay, decision maker, I'm not looking at it anymore today. I'm usually done at 11:30. We're past 11:30. Okay, David, KMB, we already looked at Kimberly Clark. Awesome stuff. Winter Park of America. Glad you like it. Brian Spence. Are you stuck in Walgreens? I don't consider it stuck. I have some. Please, do you know much about Equigrowth? Never heard of it. When I say I only invest in stocks that I've heard of, I'm talking about stocks that are household names. I mean, Equigrowth might be a household name in your neighborhood where you work and people you hang out with, but I'm talking about normal, everyday people. Okay, now we've all heard of ExxonMobil, we've all heard of Chevron, we all heard of Southwest Airlines, we've all heard of Walgreens. I don't know very many people who know of Equigrowth. Okay, so I only buy stocks that have 20 years of increased profitability. And I would have heard of that one if it was one. Woohoo! Okay, WBA. That's a no. Okay. Okay, we look at that. Doge. Okay. Department of Governmental Efficiency. I like the way that they're doing so far. He's answering from YouTube posts. I'm answering all of them, but it takes a while to get to them. How can Wendy's drop from 18 to 14 a share? Simple. They just drop. That's what stocks do. They go up, they go down. Sorry, Michael. You're playing a game. That happens. A stock can fluctuate 50% in a year. 50%. You buy it at 18, get ready for it to go down to 9. Get ready for it to go up to 24, 25. 50%. Either way, up or down. Okay, so yeah, from 18 to 14, that's not that big of a drop. Club Med Tom, hey James, will there be a recording of Saturday's training? Yes, there is. It's going to be in the Patreon archives. And it should be on TikTok too, and on YouTube. Okay, it's on the YouTube video. Yeah, so you can go to YouTube and watch it there. What is a white candle? A white candle. Oh, I'm going to find that question out for you. Nobody's ever asked me that question before. What are your thoughts on Amazon? No. My thoughts on Amazon, the company has never been profitable. Okay? Why would you why would you invest in a company that has never been profitable and doesn't share their profits? Well, kind of oxymoron-ish, isn't it? If it's never been profitable, it doesn't have profits, but the stock keeps going up. Okay, that's a gamble, in my humble opinion. I want safety and predictability and consistency. That's what I want. I don't do Amazon. It doesn't have dividends, and it's not profitable. I'm watching on TikTok, YouTube, and the main TOS screen. They are at different points in time. Yes and no. Here's the reason being, okay? TikTok is going from me to you, okay? The screen here on YouTube is going to, wait a second, it's going from my computer, no, it's going from the screen to the computer to the internet to YouTube and then to you. So TikTok directly to you is a lot quicker. It's straight, it's direct, there's no lag time, less lag time. So you're talking different companies. Besides the fact that, TikTok is a mobile app and YouTube on the computer, because it's going to my computer first, not to TikTok. Okay, so TikTok is directly to you. The computer, it goes to the internet, to my computer, never mind. It just takes longer. Your TikTok feed is most current. Yes, it is. It's live. All right. Does tariffs have anything to do with it? No, it does not. Sue, watching to learn if I paper trade HPE and Intel tomorrow. Will you show us on Friday how to close? Well, you got to be here, Sue. Ask and you shall receive. Matthew 24. Anyway, yeah, just make sure you ask. My man, nice haircut, thank you. See what happens. What stocks are you looking at this week for over 1% premium? Well, let's see what we got written down here. Ford, Walgreens, Alcoa, General Electric, Intel, Verizon. Nice. About a week ago, you mentioned this plan your plan is not for growing capital. Could you explain why? Oh, look at this. We're just about done. Hey, Johnny K. Hey, preacher. All right. Anyway. All right, let me read the question again. About a week ago, you mentioned this plan is not for growing capital. Could you explain why? Well, here's my thought. Okay, Dow 5. I'm 61 years old. Okay, I've been retired for about a little over a year, which means the money that I have coming in has got to come from me. I'm not old enough to collect Social Security, so that's not it. No such thing as a pension anymore, so that doesn't exist. All my money comes from my investing my money to gain 1% per week. Okay, now, I've been doing this for 15 years, and the only reason you are seeing it because somebody was stupid enough to put me in front of a camera and say, hey, have at it, share your knowledge. So basically, I'm sharing what I know so that my children and grandchildren will have something to see when I am gone. You just so happen to be the lucky recipient of that documentation. So this is basically a documentary for my kids and my grandkids. Now my grandson's he's gonna be 5 years old next weekend. And we got a party for him next weekend. He's gonna be 5. He's probably not gonna understand any of this until he's what, 14, 15, 16, 17, somewhere in that area. So yeah, I've been doing this for the past 20 years, been trading for 20 years. But I've only been in front of the camera since 2008, 2009, somewhere around that area. But here, with the live interaction, it's only been a little over a year. So this is just a slow progression of my journey. So I'm just sharing my journey with you guys, and you guys are profiting off it. Well, some of you guys are profiting off of it. Some of you ain't. Okay, some people listen, some people don't. Thanks, James. I always appreciate your knowledge. All right, so it's 11:40. It is past my bedtime, and I've got a lot of work to do tomorrow. So what I'm going to do now, I'm going to say goodbye to all of you, and then I'm going to put out the invites for my morning trading group for those that are in it, and we'll be looking at the stocks that are going to be popping up. Dow 5, thank you. I asked because I need to grow my account quite a bit before I could retire on 1% a week. Okay, so here's the thing, Dow 5. If you do this strategy and you do not take out the 1% every week like I do, see, I live off of my earnings. Okay, this is specifically why I created it. Well, actually, I created it for my daughter, but I can live comfortably off of 1% every week. Okay, that works for me. So yeah, that's the one I've been doing for the most part. When I say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader, the strategy had to be simple, safe, predictable, consistent, and no way for my daughter to lose, and for her to do it in less than 10 minutes a day. So 10 minutes a day, she'd turn on the computer, she'd look at her positions, and she'd make her adjustments. Monday and Friday are the most important days, because Monday we do our buying. Friday, we decide what our positions did for the week. Are we up? Are we down? What about our option? Is it in the money, at the money, out of the money? What are my repercussions, and what do I do next week? It sounds complicated, but it's really not. Okay? It's like the first time jumping in to drive a car. Okay? If any of you have ever driven a stick shift, the very first car you learn to drive on, it's a little bit more complicated. Okay? All the different things come together to get you the picture. Nowadays, after I've been driving, what am I? I'm 61, so I've been driving for 40-something years. Okay, so after driving for 40 years, I can do it basically with my eyes closed. Get in, you turn the key, listen to the motor. What's the motor telling me? Okay, is there, what is the shifter telling me? What gears it got to be in? What speed am I going? What's the tachometer saying? What's the feel of the motor? What's the vibrations? I can feel it in my hands. I can feel it in my foot on the gas pedal. I can hear the sound. So all these things come together when you're driving a car. Exact same thing in the stock market. It's just new terminology, new words. And it's not difficult. Look, it's going down. It's going up. It's going down. It's not that difficult. Adults have a tendency to make this more complicated than it needs to be. It's past 11:30. I'm done with all the questions, so we are out of here. You taught me a lot. I always listen. Taz, what's happening? Alrighty, so it is past that time of day. I will catch you guys again tomorrow, and I will see you who are in my morning trading group tomorrow morning. Those of you that are interested, all the information is in the bio, or you can just ask questions. Have a great day, everyone, and we'll see you tomorrow. Tomorrow. Bet your bottom dollar that tomorrow there'll be sun. Just thinking about tomorrow. Wipe away